Welcome back to Investing Talk Podcast. Today, we're going to focus our analytical lens on IREN. They're that crypto mining firm that's, well, recently made a pretty dizzying
A
shift.
huge shift, yeah.
Into AI.
Exactly.
Yeah.
And you sent over this stack of reports, right? And they're really conflicting. You see this massive growth potential, but then there's also this, huge underlying volatility and some, frankly, major red flags.
Definitely.
So I guess the big question we need to tackle is IREN, given this really explosive performance, but also being in such a volatile sector, is actually a good time to buy now? Before we really get into the weeds, just a quick reminder to everyone listening, please take a second to subscribe, like, and comment. It really helps us out. Oh, and if there's a specific company you want us to maybe take a look at, just leave us a comment below. We do read them.
Absolutely. And that conflict you mentioned, that's really key to what we're doing today. We're trying to cut through all that noise and synthesize these two, like you said, really conflicting stories that are coming out in the sources. You've got this stunning forward-looking potential, mainly driven by that big AI pivot they're making.
Right.
But then on the other hand, you've got these pretty serious cautionary signals popping up, especially, I think, from management's recent actions. It's a real balancing act, this one. We have to weigh both sides very carefully.
Okay, let's start with the bull case then. What makes it so compelling? I mean, it feels like IREN is really trying to shed that old, move beyond just being a Bitcoin miner.
Yeah, they want to be seen as a genuine AI data center powerhouse.
And the numbers seem to back that up, right?
Yeah.
The transformation figures are, well, they're almost unbelievable. We first look at them. Just look at the scale of the change.
Yeah.
Fiscal year 2024, total revenue was sitting at about $158.2 million. Okay, fine.
Pretty standard for their size then.
Exactly. But then you look at the recent FY 2025 reports. Total revenue just soared, up 168% to a massive $501 million.
Wow.
And it's not just revenue. The net income story is just as dramatic. It jumped from $32.4 million in FY24 all the way up to $86.9 million in FY25.
So that's more than doubled.
Yeah, this isn't just like incremental improvement. This is a company hitting the accelerator hard, changing gears at, 100 miles an hour.
And that shift, you really have to attribute almost all of it to the AI cloud segment. That's the engine, plain and simple. That's what's driving this huge revenue spike. And we see they've managed to secure NVIDIA preferred partner status. Now, that's not easy to get.
No, it's not.
It kind of signals that NVIDIA, at least, sees them as serious players in this high-performance computing game. And they're not just dipping their toes in either. They are scaling up aggressively. Right now, their AI cloud footprint is around 10,900 NVIDIA GPUs.
Okay.
But the really critical future detail, the thing everyone's focused on, is their stated target capacity. They're aiming for over 60,000 GPUs.
60,000.
Yeah, across their big campuses, places like British Columbia, Childress, Sweetwater. That potential for just immense scaling, that's basically the entire long-term investment thesis right now.
Okay, but here's the part where my jaw kind of dropped when I was reading through the source material. The margins.
Yeah.
The reported margins specifically for that AI cloud segment is, wait for it, 98%.
98%. It's staggering.
I mean, is that even sustainable? That seems almost too good to be true. 98%. You only see that in like pure software licensing, maybe.
Well, it really highlights the extreme profitability you can get from high-performance compute, especially when you pair it with the kind of structural cost advantages this company has. We'll get to that in a second, but you're right to flag it. That figure is potentially transformative for them. Just contrast that 98% with their overall net profit margin back in FY24. That was solid, but a pretty standard 20.5%. So every dollar they successfully managed to shift from that, cyclical commodity crypto mining business into this high-margin AI segment, it dramatically improves the entire company's bottom line. It's like a complete financial re-rating, potentially.
Right. Okay, that makes sense. But, a massive growth vision is one thing. It only really works if the financial foundation can actually support it.
Sure.
These high-growth infrastructure companies, they always look great until they start piling on massive debt to fund the expansion, right?
Yeah.
So are the financials here disciplined enough? Can they really handle scaling up to 60,000 GPUs without breaking the bank?
Well, based on the sources, it looks like management has shown pretty good discipline so far. As of, December 31st, 2024, they reported cash and cash equivalents of $123.5 million.
Okay, decent chunk of change.
Yeah, and it absolutely dwarfs their total debt, which was really low at just $38.7 million.
Wow, that is low for this kind of business.
It really is. And look at their debt-to-equity ratio. It sits conservatively low at 0.1. That points to a very let's say, clean capital structure, especially for a company in such an infrastructure-heavy sector.
And crucially, they seem to have proven they can fund expansion internally. That's usually a key sign of health.
Exactly. They were free cash flow positive in FY 2024, generated $61.1 million in positive operating cash flow.
So even after spending on new gear.
Right. Even after spending $49 million on capital expenditures, and that was mainly for infrastructure build-out, building these data centers, they didn't have to, desperately run to the debt markets. They could fund it themselves.
Okay, that's impressive.
But their real sort of sustainable competitive advantage, their moat, it isn't just about cash flow. It's rooted in operational strength, specifically how they source energy, low-cost energy.
Ah, the Achilles heel for miners and data centers.
Precisely. They've secured these large, fully owned sites, and they have long-term power contracts locked in. The really crucial figure here is their energy cost. It was approximately $0.03 per kilowatt hour in 2024.
3 to 4 cents per kilowatt hour. How does that stack up?
It's very competitive. To give you some perspective, the industry average for, efficient miners and data centers, it often sits closer to 5 cents, maybe even 6 cents per kilowatt.
So that's a significant difference.
It is. That maybe 2-cent difference per kilowatt hour gives IREN this vital multi-million-dollar margin buffer that a lot of their peers just don't have. This cost advantage is absolutely essential, whether they're mining Bitcoin or whether they're powering these complex AI models. It helps everywhere.
Okay, so fantastic growth. Potential for huge margins in AI, solid balance sheet, low energy costs. It sounds almost perfect.
Almost.
Right.
Almost.
Because here's where the story takes a sharp turn, doesn't it?
Yeah.
We move from all that potential to the counter-narrative, the red flags that seem to have investors really hitting the pause button lately.
Yes. The elephant in the room.
And the single biggest concern that jumped out from the sources focuses on September 2025, just recently. Insider sales.
Big ones.
Huge ones. This happened right when the stock was actually doing pretty well, riding high on all that AI pivot news.
Yeah.
You had both co-CEOs, William G. Roberts and Daniel John Roberts.
The Roberts brothers, yeah.
Each of them sold 1 million shares on the exact same day, September 11th, 2025. And the price was $33.13 per share. It's a lot of stock.
It's a substantial amount. And it immediately raises that critical question, right? What does a sale, a disposition of that scale really signal?
Exactly.
You've got 2 million shares being sold in total by the absolute top leadership, just as the stock is supposedly hitting its stride based on this transformational news. Is this just, a simple pre-planned diversification for them, taking some chips off the table? Or is management maybe signaling that they think the stock has hit some kind of unsustainable near-term peak? Are they taking profits before perhaps potential execution risks with that big GPU rollout start to materialize?
You have to ask the question.
And it wasn't just them, right?
No, it wasn't isolated. The sources also confirmed that other entities controlled by insiders, like Awasi Capital, they also exercised and sold another 1 million option shares right around the same time.
Wow. So it's a pattern.
It looks like it.
Yeah.
And the impact was immediate. You saw the social media sentiment, which had been, frankly, pretty euphoric based on the fundamentals.
Understandably so.
Yeah, just turned neutral, maybe even slightly negative, almost overnight.
Yeah.
And predominantly because of this sustained and, frankly, quite aggressive insider selling. People noticed.
Yeah, you can't ignore that kind of volume from the top. And look, while the insider selling is a very specific sort of managerial red flag, we also can't just forget the inherent risks baked into the underlying business itself.
Good point. Still a crypto miner at heart, partly. Exactly. We have to remember, this stock is still dependent, to a degree, on Bitcoin prices. Their revenue and margins remain highly sensitive to where BTC is moving. And high volatility is just, well, it's typical for pretty much all crypto mining stocks.
Comes with the territory.
It really does. So if Bitcoin struggles, the mining side of IREN struggles. And that's inevitably going to be a drag on the whole company, even with the AI growth.
So given all this conflict, then, the bullish fundamentals clashing with this bearish insider action, it's probably not a huge surprise that the stock is currently kind of struggling for direction.
Yeah, it seems stuck.
If you look at the technical snapshot over the past month, the share price has basically been bouncing around in a pretty tight range, trading between roughly $31.60 on the low end and $41.10 on the high end.
Okay, so clear boundaries.
Seems so. The key technical levels show pretty strong support, holding around that $31.50 to $32 mark. That suggests that's maybe where the institutional money feels comfortable stepping in to buy right now.
And resistance.
Resistance seems to be kicking in between $39 and $41.50. Now, with the 50-day moving average sitting around $36.80, and the relative strength index, the RSI, hovering right around 54.
Which is pretty much neutral.
Exactly. The sources confirm there's currently no strong, definitive technical trend. The stock's just kind of oscillating, maybe waiting for some actual news to break it out one way or the other.
And that oscillation means these upcoming events are going to be absolutely critical, right? They could be the catalyst to break that current trading range.
Definitely need to watch these dates.
So we do have some clear short-term catalysts confirmed on the immediate horizon, things you really need to watch if you're following this stock.
What do we got?
First up, September 30th, 2025. We should get the Q3 preliminary operational results. That'll give us an early peek at whether that massive AI fleet scaling is actually staying on track.
Crucial update.
Then, October 15th brings the institutional holdings disclosures, the 13F filings. That's where we'll see if the big institutions were buying or selling during that insider sell-off period. That gives you some critical third-party confidence data.
Or lack thereof.
Or lack thereof, exactly. And finally, we've got the official fiscal Q3 2025 earnings release, which is scheduled for November 30th. That'll be the full picture for the quarter.
Okay, so those are the confirmed dates. But beyond those, the market seems to be buzzing with more speculative drivers, right? Things that could instantly change the whole risk profile here.
Yeah, rumors are flying.
There are these persistent, apparently strong rumors that IREN is in some kind of confidential talks. So they're talking about a strategic large-cap tech partnership.
With who?
Potentially with a global hyperscaler, one of the big cloud providers, or maybe a major AI vendor, someone who's eager to get their hands on IREN's new, potentially low-cost data center capacity.
That'll be huge.
Absolutely game-changing. Furthermore, there's also market chatter about potential M&A interest, mergers and acquisitions. The buyout rumors.
Exactly. Given their low energy costs and that clean balance sheet we talked about, sources suggest several U.S. and even Asian technology conglomerates might be evaluating IREN as a possible acquisition target, or maybe looking to take a significant equity stake.
Okay, so if either of those rumors actually turn into reality.
Yeah, if either of those materialized, you'd likely see the stock react pretty violently, probably to the upside, assuming the terms are favorable. Big if, though.
Big if. Okay, so let's try and pull all this together. You've got the surging AI revenue, the really impressive margins there, the clean balance sheet, the operational dominance with low energy costs. But then you have that huge signal of potential managerial exit with the insider sales. How do we assess this?
Okay, so based on synthesizing all the sources we looked at, the overall assessment for IREN right now, it kind of lands right in the middle. A 5 out of 10.
Smack in the middle. Why? Because the really high potential you see coming from that, 98% margin AI growth in their excellent low-cost operations, it's almost perfectly neutralized by the extremely high volatility that just comes with any crypto-adjacent stock and that undeniable red flag from the insider selling event.
Yeah.
It's just perfectly balanced risk right now, which requires some serious conviction from an investor.
Okay, 5 out of 10. So if you're an investor listening to this, how should you think about it? We probably need to break down the takeaways based on, your investment horizon.
Yeah, that's the best way to look at it.
Okay, so for short-term trading, what's the consensus?
The consensus suggests this is probably not favorable right now for short-term plays.
Why not?
Well, you've got that overhang created by the insider selling that tends to put a cap on things in the near term. Combine that with the lack of any clear technical upside, like that neutral RSI confirms, and it just means the risk-reward for quick moves, quick trades, it doesn't look particularly attractive at the moment. Too much uncertainty.
Okay, makes sense. What about for the longer-term investor then? Someone looking out, say, a year or more?
Well, for the long-term horizon, this is almost the textbook definition of high risk, high reward.
Okay.
It's really only suitable, strictly suitable, if you, the investor, are highly confident in two very critical factors. First, you need continued strength in Bitcoin, because that still underpins a part of the business.
Right, the crypto link.
And second, you have to believe in IREN's ability to flawlessly execute that massive AI fleet expansion. Specifically, can they actually operationalize that 60,000 GPU capacity target effectively and efficiently?
That's the billion-dollar question, really.
It is, and without real conviction in both of those things, strong Bitcoin and successful AI execution, The risk here might just outweigh the potential reward for a long-term hold.
So it really comes down to your belief in management's execution versus their recent actions.
Exactly. The whole story of IREN right now is this fascinating conflict of signals. It really asks you, the listener, to consider how much value should you place on the company's forward-looking capacity? That theoretical, potentially transformative 60,000 GPU goal
There's
versus the immediate confirmed actions of the people actually running the company specifically, the co-CEOs each deciding to sell 1 million shares right now. Which signal do you find more critical for judging the current valuation? Which one carries more weight for you?
That is a fascinating question. Definitely one only you can answer for your own portfolio. Yep. Well, thank you for joining us for this exploration into what is truly a very interesting and complex stock story.
My pleasure. Lots to think about here.
Definitely. We'll see you next time on Investing Talk Podcast.